Hi class. So today what I'm doing is just a little bit of an introduction into long-term operating assets. So basically when we look at long-term assets, we look at 4 different categories, okay? Property, plant, and equipment, intangibles, and then investments in this other category that captures things that don't quite fit into other things. So with property, plant, and equipment and intangibles, we are using these in operations. So the machines are being used, the land on which our facilities are, it's being used. The patents and copyrights and other intangibles are being used to help us produce revenue. That makes them operating assets. Now, if we had land and it's just sitting there and it's not being used in operations, that's going to be classified as investments. So it's important that we distinguish between what's being used in operations and what is not. And we're going to do investments at a later time. And then the other category, just to give you an idea, maybe a long-term prepaid could be here because, think of a prepaid within 12 months or so of the operating cycle. What if it's a 3-year insurance policy? Well, you'd have to take the part that's beyond the operating cycle, beyond that 1 year cutoff, and that would be part of the other category. All right, so that's what we're dealing with, operating assets. We're focusing here. And what we have to do is look at these 3 major issues that have to do with long-term operating assets. And the first part of this is that we acquire them. And when we acquire, let's say we're giving out cash or we're doing a note, we have to make sure that we record the asset, whether it's machine, land, whatever it is, we put that at the right amount, okay? So we have acquisition issues. Then during its use, there are 2 major items that come up, and one is the depreciation when it comes to the property, plant, and equipment. So we learn about 3 different methods of doing depreciation. There's also amortization of certain intangibles, and we use straight line for that. So once we learn our 3 methods of depreciation, you're covered for both sets of assets. Okay, and then the other issue that occurs during the use is that sometimes we actually put money into our assets, and maybe it's an engine overhaul, let's say for a machine. Well, that's a big bunch of money, and so what we have to decide is, do we capitalize that? Is it a long-term part of that long-term operating asset, or do we expense it? And so what we learn is that the general stuff like that keeps it in its typical maintaining order, the way it was designed to, oil changes and just routine stuff, that gets expensed. But when we have something that really increases the efficiency, increases the life of the asset, and it's a material amount, then we're going to go ahead and we're going to capitalize that. So now the last thing is then disposal. What happens when we get rid of it? So those are the main items that have to do with what we're studying in this chapter. And so then there's individual videos that show you a little bit more about how to do depreciation, how to do acquisitions, what to include, what amounts to include. So, and then we have a couple videos on disposal, or at least one. All right, so just wanted to give you an overall view of everything. One more thing I forgot about is the acquisition part. We get into self-constructed assets, and that gets a little bit complicated because we actually capitalize the interest, some portion of the interest cost the company is incurring. So that's a huge topic, brand new to this class, and I have detailed video on that one as well. All right, hang in there, guys, and looking forward to seeing you soon, maybe on Zoom, or email me, let me know if you have questions. Thanks.